That's why I'm late getting in here, is because I'm hearing how great the investment forum was too. So I hope you all enjoyed it, and thank you again to all of our panelists and our dear Rob, who's been a fantastic moderator for us. So at this point, I would like to introduce to you once again Mr. Patrick Wood. He's going to give you an update on what's going on in the industry in Western Canada. So Patrick, take it away.
Hello again. I'm back. You're probably getting tired of me at this point. But I'm here to tell you what's going on in Western Canada. I play a fun game every time I do one of these, which is how many people in the room would like to buy a self-storage facility? Just raise your hands. Yeah, so we're like 50%. How many people want to sell theirs? Nope, okay. No one's biting on that again this year. Well, that pretty much sums up the Western Canada market, so I will talk to you guys later. No, but there's actually been a lot of activity in the Western Canada market in the last year. Again, I was asked to make some visuals, so feel free to ignore those, because I'll just tell you what you need to know. So the key thing right now is for everyone here to stop overpaying for storage, please. Yes, it's a great asset. Yes, it's going up, but I've seen some deals go through and not go through that I can't make sense of. I've personally been responsible for blowing up 4 storage deals because an appraisal couldn't come anywhere near what was offered. Sometimes because the numbers that were presented may have been, how do you say this politely, fake. Other times because someone just really wanted an asset and that's not what the market would pay. As an appraiser, it's our job to talk about the whole market, not a one-off sale, and one sale doesn't make a market. And that's a really difficult thing to explain to a seller or a buyer who says, well, this is definitely worth that, and that proves the market. Well, probably not. What we're seeing right now, especially in BC, is a lot of secondary and tertiary sales. So, your smaller 50,000 population down to, I just did something in Fernie, BC, which I think has a population of 6,200 people if you're counting a few dogs. We're seeing a lot of those sales because those are approachable assets. You're talking sales between 1.4 and 2.5 million bucks. So a pretty cheap house in Vancouver, which is great because they cash flow well. We have seen in the last year, maybe a bit more than a year, big sale in Vancouver, the Westmount sale. I'm not going to go into the speculation, the details, all that. I've analyzed it my way. If you have questions, you should talk to the person who bought it. At the end of the day, it's a sale that happened, and I think they're happy with their asset, and it did set a new benchmark in the Vancouver market for price, which, as an appraiser, really gave me a lot of headaches. Having said that, it looks like the market's still very strong. As I demonstrated, no one wants to sell. And I think if you did want to sell, there'd be at least 15 people in this room that would buy from you at any price. However big your asset is, there's people in this room that could probably make it happen. So that speaks to sort of the general market overview. Now, because nothing's for sale, we've seen a lot of people entering the market to build or to convert buildings. And that's sort of what I'm going to touch on now. I'm going to do just a quick rundown of BC and what's going on. Then we'll get into the other provinces. Then I'm going to talk about rental rates, occupancy, and cap rate after, just so everyone sort of knows where we're at. In case you're wondering, I travel a little bit, and this is everywhere that I've been in the last year. I do a market survey anywhere I go, so I'm pretty in touch with what's going on in the markets. Air Canada does really like me, although last year 66% of my flights were delayed. So that was fun. In Vancouver proper, we're still seeing people coming to the market to build. Depending on what you want to consider a project moving forward, there are 4 or 5 projects that are either in the ground or imminently going into the ground. The total of about 250,000 square feet of rentable space. There's a few others that are kind of around the fringes, just maybe we'll do it, maybe we won't. Will the city approve it? Won't they approve it? So there's a really big building boom kind of happening in the Lower Mainland. In Richmond, we have 1 facility underway, and there's talk of another 2, although I know one of those has kind of fallen apart in the last month. Burnaby is making life really hard to build anything new. Some conversions are being talked about, but there's not a whole lot going on with the city council right now. If you talk to a planner about self-storage, chances are the phone will get hung up on you. The North Shore, West Van, a few people kicking around some ideas, but land's pretty expensive there as well. And it's just, the zoning is kind of it's difficult to get through the city. New Westminster, we have an expansion on one of the facilities and a proposed other facility. But in New Westminster, because of the Burnaby issues, the demand is still very strong. Coquitlam, something working its way through, and we have that beautiful new one that has a car wash in front of it right on the highway as well that just opened, I think, 3 weeks ago. It's a really nice facility. If you want to see a good example of a Class A, third generation facility, go take a look. It's great. And did no work on it, not affiliated with it. It's a really good example. Surrey, currently 3 in the planning stages, 1 underway. Abbotsford, there's at least 2 in the planning stages, possibly a third. Unless you have a well-located, great piece of land with good exposure, probably stay away from the Abbotsford market with building. There's a lot of things to be absorbed and kind of worked through in that market the next little bit. Chilliwack has for sure 2 new facilities, possibly a third coming, but in Chilliwack it seems the demand is never ending. The last facility to open in Chilliwack leased 40,000 feet in 9 months and has a waiting list until they build their new facility now. So clearly that's a market that is really kind of hot for storage. Having said that, there's 3 people ahead of you if you're thinking about putting something together. When I did call the city about some information, they said they'd approved 7,200 new single-family units in the last 6 months. So land's still cheap out there. People are moving out to the valley because you can afford houses, and that's sort of being shown in demand for storage. Mission has a new facility plus 2 expansions. Storage for Life is expanding, and I think Extra Space Now is as well. And then there's one sort of in the business park to the west of the city as well. And that's sort of your lower mainland overview. Occupancies are still incredibly high in most places. I've done some surveys of some of your facilities, I won't say who, and was told I have 1 unit at one of them if I'd like to get in my car and come rent it right now. Otherwise, they won't hold it at a pretty incredible price. Rents are up since my last survey as well. So really, if you got something in Vancouver, you're doing really well. And that kind of holds true all the way out into the valley. Like I said, Abbotsford's a bit of a challenge right now. There's some space available and some people pricing things maybe in ways that are going to hurt them down the road. But yeah, occupancies are up. It seems like there's a building boom on in Vancouver. And just to put it in perspective, let's assume that the per capita demand for storage in Vancouver is 3 square feet. I'd argue it's higher, but we'll be conservative. Stats Canada says we're going to add 2 million people to the lower mainland in the next 15 years. So where are we going to build 6 million square feet of storage? I don't have an answer. I don't know if you guys do. So clearly occupancies are going to stay high, which is going to push rents high, which is great news for everyone here. As we talked about earlier, property taxes are on the way up. Other expenses are up too. So my advice is make sure you're on your rent increases, make sure you're on your efficiencies, and everyone should be pretty happy. Moving over to Vancouver Island, we've had a lot of transactions of smaller facilities. I've personally worked on 6 in the last 6 months, ranging from 9,000 square feet with a retail plaza up to about 27,000 feet. Cap rates on the island have compressed a bit from where they were a year ago, and that's just due to sort of transactional volumes, but they're still above 6 everywhere on the island. In terms of Victoria proper, which is where I'm from, we have 2 facilities sort of in the planning stages. One is having issues from City Hall, and the other looks like it's a go and moving forward pretty quickly. As you move north, Nanaimo's got 2 facilities in planning, nothing in the ground yet, but something's imminent. And then Parksville, I don't know if people know of Parksville, it seems to be the place in the world that can just keep absorbing storage facilities. The last survey I did showed a per capita usage of storage around 9 square feet, and everything is full. There's a new facility being built. it'll be full too, I'm sure. I'm sure Rob Madison doesn't want me to say this, but yeah. Having said that, they have land to expand to, and I'm sure they will be. So Parksville is interesting. I have to assume it's the retirees and just the amount of money in the area. It's kind of a hub for the area. So that's a pretty interesting market. We don't see that many places in Canada. He also has the nicest facility with palm trees and fountains. So it's always nice to visit. In terms of the interior, we've seen a lot of consolidation in Kamloops with a major player, Storage Vault, buying up almost everything in town. There is a pending deal on something. We don't know who bought it yet. I know who didn't buy it for Versatile Storage, and we'll see how that shakes out in the next few weeks here. And then a new car wash / facility proposed for right on Highway 1 in Kamloops. Kelowna, if you're planning to build in Kelowna and you're not planning to build downtown, probably don't. It's if you're going to build by the airport, there's a lot of competition. There's vacancy there already, and adding to that is just going to make everyone's life more difficult. Same with West Kelowna. If you're planning to build in West Kelowna and you don't already have something in the ground, you're probably about 3 facilities late, and one of them is really big. So that market's probably going to have some turmoil coming up. It already has one of the large facilities in BC, with budget storage being about 175,000 rentable feet. Last time I appraised it, it was 96% full. So clearly there was some demand in that area, but we'll see how that moves forward. We're seeing a lot of sales of things in the interior and the smaller, like I said, I was in Fernie, I've been in Vernon, a few other smaller places, Prince George, just small things being bought up by people entering the storage market, no real consolidation happening. It's just, oh, storage sounds good, so let's buy something for $2 million and see how it goes. So that's accounted for a large amount of the transactions. On top of that, on the Lower Mainland, Agassiz Storage was just sold. I believe it closed yesterday or the day before. I could be wrong on those dates, but it has sold very recently. And that was a very good sale of a good facility, well occupied. Just finished an expansion with a waiting list to fill all the lockers. So that was great. So that's sort of my BC rundown. I'm going to go to Alberta, Saskatchewan, Manitoba, and then I'm going to ask you guys if you have any questions after I go over cap rates. In Alberta, things are not quite as rosy as they are in BC. Things are better. If you were in Red Deer, my talk in October is pretty negative. I feel like it's changed a bit from then. Red Deer is still a struggle. If you ask anyone here who has Red Deer facilities, they're not their shining star. They're not their leaders for occupancy or rent. But everything in Alberta is getting better. Price of oil's higher. People are getting employed again. Maybe there'll be a pipeline. I mean, we all own 3 centimeters of one right now, so hope we're enjoying that. In terms of Fort McMurray, from what I've heard, occupancies are on the way back up finally. People are coming back to town slowly, but it's not like it was in the heyday. There's still vacancy. Rates aren't really moving a whole lot. Edmonton, there's 2 planned facilities. And Edmonton, we saw a recovery before anywhere else in Alberta. Slowly started moving up about a year ago, and then we saw occupancies kind of keep doing that with rates moving up as well in the last 6 months. My last survey was pretty encouraging. There's a very large new facility that was a Sentinel that's leasing at a very good rate for a 5-story facility in a market that was supposed to be horrible. And then Calgary hasn't seen quite the same return as Edmonton has yet. Calgary's more the white-collar jobs. You don't have the guys, putting the pipes in the ground and things like that in Calgary. You have the guys behind the desk, and they haven't gotten all their jobs back. There's also no government in Calgary compared to Edmonton, and they have an NDP government, so a lot of new jobs were created with that. So Calgary is a little far behind Edmonton on the recovery, but we've also seen 4 new facilities in the planning stages. 2 are in the ground now, and not small facilities. One's, I think, about 80,000 feet rentable, and one's about 110. And I think I talked someone out of building 140,000 feet next to 3 vacant facilities by the airport, but we'll see if they press forward on that. Lethbridge, kind of steady. It's not oil and gas, it's more transportation oriented. Rates are maybe up 1% in the last year. Occupancy is pretty steady. Not much going on in that town in terms of negative things. It's steady. That's what Lethbridge has always been, probably always will be. We've seen some small sales in rural Alberta, sort of your 20,000 foot facilities, and there's a few for sale right now as well that no one's really jumped on, just because I think they're a little harder to get your head around, but once you see what's going on in the Alberta market, they may make sense. Saskatchewan, doing better. Regina and Saskatoon have their highest populations ever. People are moving to Saskatchewan, which, if you're from there, which I am, is a pretty shocking thing. The cities are getting better. The rural areas are steady. In Regina, there's one expansion underway and two new facilities planned, although I think only one of them will go through when the dust settles. Saskatoon, there's one new facility proposed and one that is just open and starting to lease out. Moose Jaw, nothing new to report. Rates are up a bit. Kent's not here today, but he's a fairly aggressive operator and responsible for raising rates a significant amount in that town in the last 2 years. And if you know Kent, you understand what I mean by fairly aggressive. So he's done well there. And then in terms of smaller areas, there's a few things sitting on the market because valuations are just not there. I mean, there's one in Estevan that they think they should get a 6.25 cap on a facility that's 20,000 feet and 4 hours from your closest international airport. It's been sitting there for about 2.5 years. So once a valuation is met, maybe they'll get there. Manitoba, I'm really only going to touch on Winnipeg because that is essentially the storage market in Manitoba. There's some small things in Brandon and other places, but Winnipeg is sort of where it is. There's one facility in the planning stages and one that was in the planning stages people walked away from. Occupancy around this pretty flat. Rates are up about 1.5%, so not a whole lot going on. Nothing negative, nothing positive. Your occupancies we're seeing, depending on what part of town you're in, between 70 and 85% occupancies. 70 being in the areas that are a little sketchier, and I would now require danger pay to go appraise, and the 85% being in the nicer areas that you might not get shot in. So that's sort of the rundown of what's going on in the markets. In terms of cap rates, and I know I said stop overpaying, and I know a few people who I do not see in this room have recently bought things in the GTA that may speak different to this, but in the big picture, and we're seeing it in secondary markets already, cap rates aren't going down anymore. Cost of lending is going up. I think anyone who has gone to refinance in the last 3 months probably knows that you're not getting the same rates you used to. And with what's going on with US 10-year bonds, Canadian 10-year, our dollar spread, our economy that we're not sure about what's going on, they're not going down any further. There may be some people buying one-off things that they really want, that they're going to pay a higher cap for, but the market as a whole is stable or increasing in some markets. I've seen things in the interior of BC go to market, sit, because they were at an aggressive cap, and then they lower their price and they sold in a week. So now we're seeing people bringing things to market going, okay, that didn't work, let's get realistic. And then buyers will play. At the end of the day, you have to make money if you're going to buy something. And if you're paying too much to borrow the money and the cap's too low, there's no spread. This, of course, applies to people who are borrowing money to do things, not people who don't. That's different metrics and a completely different conversation that I'm not covering here. What do we see in the future? If interest rates hold steady, then the cap rate should hold steady. If they increase, and I think last I saw Scotiabank had factored in an 85% chance of a July increase from the Bank of Canada, at some point the cap rates are going to have to keep pace. Historically, we've seen self-storage be 1.5 to 1.75 points above industrial So I've had discussions or arguments with a few people around the room about valuation, and if you just look at the historic trends, that's what it is. And lenders are pretty wise to this. They're not going to accept something that is a light industrial cap on something that is not a light industrial product. So, when I'm talking to people about building or purchasing, we have that whole conversation about let's be realistic, because that way you'll be in good shape, the bank won't be upset, I won't be upset, and everyone just wins because you've bought something properly. I understand when you're trying to build something, you may want to get a higher value, so your loan to value is lower and all that, but at the end of the day, the bank has to say yes or no. And they're wise to this too. I think a third of my job right now is educating lenders. I've had phone calls from all of the top 5 banks, plus a few others further down the list, with some of their major risk management people out of Toronto or Edmonton, depending on who it is, talking about the self-storage industry and where it's going and their feelings and what we're seeing. And I assure you, we're on the same page. So if they're the ones making the decision, we should play by their rules. So that's my overview of what has happened in the Western Canada in the last year. Usually throw it open to questions, so have at her.
Hey Patrick, question for you. You mentioned in passing there was an operator in Abbotsford, and he said that the way they had handled pricing was going to potentially cause problems for them long term. Did you mean that they just raised too much too quickly, or what was the story there?
They lowered too much.
Oh, interesting.
So you talk to any major operator and you try and hold your rates if you can. You take the occupancy down a bit, but that way when it returns, you don't have to work on getting your rental rates back up for everyone in the facility. So what they did is just cut rates, 20% for everyone who's coming in now. Well, it causes more than one problem. 1, your revenue's down. 2, all the people who are in your facility are going to be pissed off they're paying more than the new people coming in the door. And then when the market grows into it, because let's be honest, the Lower Mainland is growing. So when your occupancy picks up, well, now you got a 20% lower rate that you have to try and get back up. So I always advise clients, if they're in a situation where they're trying to add people, there's some really good models out there. Public Storage has got a great $1 for your first month, I believe, if you pay for the second month. There's Budget Storage on the island, does your first month free no matter what. Things like that expire, rather than just saying, I'm going to give you a 20% discount forever, have a good day.
Right.
So that's what I'm referring to.
Makes sense, thanks.
Hey Patrick.
Hey.
You mentioned, as you went kind of through your spiel about different properties that are either in the works or in planning and such, can you give us some context as to these new projects coming online, as far as the percentage of them are about existing owner-operators as opposed to these coming to the marketplace?
I'm throwing a dart here, but it's an educated dart. I'd say 75% are new to the market. Some people are going out and getting third-party management, which if you're building something big, I would be the first person to recommend that. There's great third-party managers downstairs. I'm not going to point you to any single one. They'll all do a great job for you. If you are building something 70,000 feet or bigger and rentable and you've never managed a storage facility in your life, that's going to be a rough road. There's just things you don't understand about the business if you've never done it. I've been in some facilities that are in that situation, and I'm not an operator, and I'm going through and going, well, why do you do this, or why is this like if you get a professional, you'll make more money in the end if you're doing that type of thing. Now, if you're at 20,000 feet, that's a different story. You can probably fumble through a few things and not have it affect you too badly. But on the bigger scale, especially in Vancouver, if you're talking about a 70,000 rentable foot building costing you $25 million to build, that's a big investment. Paying someone 5 or 6% to make sure you get the most out of the investment, when you're going to have to pay yourself anyway, probably a pretty good call.
Yeah, just what ranges and cap rates are you seeing for different regions?
So every region is, like you said, different. I would say Vancouver right now if you brought me a extremely well occupied, well managed, well built, well located facility in the downtown core, I'd say it's a 5.5. I could probably find you someone in this room that'd pay you a 5 for it. As you move out from Vancouver, or you get into less desirable facilities, or maybe their occupancy isn't great, or there's some maintenance issues, or it's an older building, or you're in the 5.75 to 6. Once you get moving into the valley, you're 6 and 6 up, and I think I just appraised Agassiz based on the facility and everything it was at a 6.75. Into the interior, Kamloops, you're going to be starting at a 7 and going up from there. I think the versatile storage, if the numbers that they presented on the listing are to be believed, and there's a really big asterisk next to that, that sold at a 7.7 cap. That's probably either the numbers were wrong or they undervalued it. I would say even that would be a 7.5. And then once you get to the smaller and smaller markets, it goes up pretty quickly. I think the last thing I did in Fernie, we were happy at an 8 cap. Alberta, I would be hard pressed to give anything Alberta a cap starting with a 5 right now, just because of what's going on in that market. It's just not there yet. Having said that, good facilities in Calgary, Edmonton, you'd be a 6, 6.25 if you got some occupancy issues. And then Saskatchewan's always higher. Be tough to give anything that wasn't in Regina or Saskatoon something that didn't start with a 7.
So your cap rates are based on last 12 months, last 18 months, projected forward?
Yeah, so it's sort of sales in the last 12 to 18 months. I try and, unfortunately, you guys aren't selling anything right now. If you could get on that'd be great. Give me more comps. I try and look at the most recent sales, but then you have to look historically in the markets too. Like, for instance,
I think I was talking more about revenue from the facility. So.
Oh, okay, revenue from the facility. We do previous 12, but we will stabilize things. So if you have a Ferrari that you're writing off, I'm going to take that off your expenses. But if you're also saying that you're only paying $12 in management fees, I'm also going to adjust that. And same with income. If you've given your entire family free lockers, we'll probably do some adjustments on that. So you stabilize in your income and your expenses previous 12. I have, in some cases, when requested by either lenders or the vendor purchaser, if they agree, looked at a rental increase moving forward. But that's something that has to be discussed ahead of time. It's not something that we do on a daily basis sort of thing. That's it. Anyone? Anyone at all?
Patrick, I think there seems to be a focus on some of the large urban centers, but what's the trend line in cap rates and activities in sort of the terraces, the Prince George's, and Woodlands Lake type of market?
So we're seeing those starting to move up. Prince George, there was a sale in the last 6 months. It was 7.4, something like that, depending on how you want to analyze it. That's higher than what I would have expected. Fernie, was up to an 8. Now that was a well-bought facility, but nevertheless, we're seeing those not moving down anymore, just because they're further away from centers. So, like, if you have to get to Fernie, either you hop on a plane and you fly to Castlegar, which you may or may not get to land in. And if you do land in, you might get to stay for 2 weeks because you're fogged in. And then you drive 2.5 hours. Or you fly to Calgary and drive 3 hours each way. So people aren't picking those assets up except locally, which means you have a smaller pool, so there's not as much competition. So we're not seeing cap rates move down at all. In some cases, I worked on something in part of the interior that I can't quite discuss because it's not done yet. The cap rate from what it was offered to where it was actually sold moved 1.5%. And it'll be above 8 cap for a decent facility, but in a very small remote market. So that's what I was saying earlier, is that we're seeing the cap rates move in your 3 and your 2.5 markets coming into your 2s now, but they're moving up, not down.
You mentioned Castlemar. Do you have any cap rate info for West Kootenay?
Not yet, but shortly, if you catch my drift. Anyone else? Quiet bunch today. We did like almost 40 minutes of Q&A in Red Deer. Okay, well, thanks everyone. Any more questions, anything like that, I'll be downstairs, or I think you can find my contact info somewhere around the association.
Oh yeah, I think we might be able to find that for you. All right. Well, thank you very much.
Thank you.
What time is your trying to get your picture here? Danny?
No, she's gone.
Danny's gone. Okay. All right. Well, thank you.